Well, the markets so far seem to have at least stabilized. We aren't seeing the the cliff edge that we've seen this morning. Of course, the markets are still down, of course, from where they were. We still don't know what the American markets, when they open, possibly in sort of a couple of hours, what they're going to open like. The sell-off might continue. People might be ready to accept on this stuff. There was the whole fake news stuff that went round that Donald Trump was like considering a 90-day reprieve. That's still out there in the ether, apparently. So who knows? There's still all this stuff about other sectoral tariffs maybe coming this week as well. But needless to say, it does look like these tariffs are potentially here to stay. Although we'll see, we'll see. There's some stuff happening potentially in the Senate, which could get quite spicy if that continues. We'll see. But needless to say, we have to look back over to here. What can sort of the UK do over here? And we talked about this yesterday when we had sort of Graham and my uncle on. We were talking about this, and I really do think that the best ironic move may just be to do nothing. Because if you put a reciprocal tariff on, that hurts your businesses here, that hurts your companies here as well, and you double the pain. Now, China is doubling down on its tariffs. You tariff us, okay, we're going to tariff you right back. And it is a match between who has the more power. Is it the Chinese supplier or is it the US consumer? Who knows? They seem to be playing chicken with each other with tariffs. And we know that Japan and South Korea also potentially going to respond at some point as well. We still haven't seen what the EU is going to do on this front as well. But at the moment, no one's done anything because all the damage is on the US. Yes, other sort of countries and businesses sort of, taking damage from it as well. But it is the US and US consumers and US businesses based in the US that are taking the biggest hit from all this. So it is the war game scenario. Maybe the best move in this is to do nothing and just let all the pain be inflicted on the US on this. Because, as we talked about before, now there are alternatives. Maybe this is where you start to see these turns away from the UK, from the US, shall we say. It's entirely possible that's what we might see. But, however, something that is, and something that probably might be done certainly next month, indeed, is, of course, what the bank might do. And, of course, a lot of people are looking at, might this increase inflation? We haven't got the numbers in at the moment, but so far, inflation is keeping steady for the time being. For the time being. We do not know fully, of course, what the inflationary effects of these tariffs will be yet, but considering the fact that we had just got inflation pretty much under control at that point, we are now looking at one of the former Bank of England chairman coming out saying that this May, they should cut interest rates to 4% amid all this tariff turmoil. And like I say, you could be seeing at the moment, the US and China playing chicken with each other about who can put the highest tariff on each other. And we'll see. We'll see what happens in that. But meanwhile, of course, I think it's important to see what the Bank of England is doing here. And of course, I think this might be a valid reason to do so, to at least combat inflation if that does start to rise. So before we do go on into this, please do remember to click the like, share, and the subscribe button down below. Of course, there's the Patreon page, there's the Buy Me Coffee link, there's the YouTube thank you button, and of course, as always, there's the Pony Club down below as well. So let's crack on then into this. So banks should cut interest rates to at least 4% in May amid all this tariff turmoil. So the Bank of England will use its meeting next month to cut interest rates by at least a half percentage point to 4% in response to now the financial turmoil created by Trump's tariffs, the former Deputy Governor Charlie Breen has said. He believes that this aggressive strategy is now needed to combat the fallout from Trump's tariffs war, which has knocked trillions of pounds off global stock markets, undermining businesses and consumer confidence. Bean, who was also the chief economist and the government independent forecaster for the OBR, said that this uncertainty over the next few weeks would force businesses to delay investments and hit consumer spending. And I think that's what we are going to see as well. I think you might end up seeing a delayed response because now these tariffs have come in, businesses are going to be like, okay, well, what do we do? That's changed our next 6 months, 12 months forecast completely on this. So we'll see what happens on that front. Bean, who was, I don't know if he said that. So he said that until at least Trump's Liberation Day tariffs plan was announced, he was a very long-standing interest rate hawk who supported high interest rates. But he said the crazy situation in the US is now going to have profound effects on the UK, forcing the central banks to cut rates more than expected. So here you have a guy who was like, no, I am like high interest rates, but what's going on in the US? I've changed my mind on that. Another, of course, former bank rate setter, David Blanchfellow, said that Bean's intervention went a long way to, of course, reorganizing and recognizing the significance of this economic shock. But Threadneedle Street should, of course, hold an emergency meeting before the next scheduled meeting on the 8th to consider a very deep reduction in the cost of borrowing. Blanche, however, who was also a member of the bank's Monetary Policy Committee, did campaign against the interest rate rises before the 2008 banking crash. He urged the bank to move quickly to bolster confidence and to prevent an economic downturn. He said, you really need to care about consumer confidence because when it falls, you start seeing a recession, he said. Financial markets have currently priced in a 0.25% cut point to 4.25% back in May. Two, of course, more cuts of that very same size this year, reducing UK interest rates to 3.75%. And that currently, from what it has been, of course, is good. The fact that, you are now getting interest rates down even more, the fact that you are seeing the bank cut interest rates, this gives people like Rachel Reeves more headroom to go and borrow stuff, to try and get more investment, to try and encourage, more investment to be more and more to sort of put more money into the UK. And especially one of the things we are seeing in this is apparently, according to like a, I can't remember what he's now, one of the hedge fund people, money is apparently coming from the US to the UK because they are now potentially seeing the UK as a lot more safer bet to invest in than the US. Interesting that will happen. Now, can we take advantage of that? Absolutely, we should take advantage of that. But of course, it's still early days. That may not turn out to be the case. It may not. It may just be, shall we say, a small, flutter of things happening, not a continuing trend. If it is a continuing trend, then we should absolutely take advantage of that. But the OBR, of course, forecast last month that the similar global trade dispute would, of course, reduce the UK's national income by 1%, lengthening, of course, the 12-month period of stagnation by another year. Trump has, of course, imposed a minimum percent tariff on all imports from all of the countries that trade with the US. The most onerous charges in the range of countries from the EU to 20 to 34%. But Bean said it is not just the tariffs that are the problem. It is the huge uncertainty that these have created, delaying buying, investment decisions, by necessary decisions by even businesses and consumers. So this is what we were talking about yesterday. It is uncertainty. And if people are uncertain, they don't invest, they don't buy stuff. What do you need in your economy? You need your money flowing. So you need people buying and investing in stuff. You need that economic activity. But he continued to say back in November 2008, the markets did expect a 0.25% point cut or maybe even a 0.5% cut. But we were talking, of course, to our agents in those regions, and they said that businesses' orders have fallen off a cliff. It was a very obvious situation, a very serious situation. We, of course, surprised everyone with our 1.5% point cut. This was, of course, huge when it needed to be. The tariff situation is, of course, not of the same magnitude, but it is a disinflatory shock and an event that the bank at least should react to very, very strongly. The threat of the financial accident was also heightened, he said, as now companies adjusted to the impact of all these trade tariffs. So that is another thing you're going to see. What are companies going to react to like this? Because obviously this just happened out of nowhere, and then you got the weekend. And now how companies are going to react? You might get companies, as I said yesterday, companies just think, well, Trump's only going to be in there for another 3.5 years. We'll try and wait him out. You may see, of course, them do investments into other countries. Again, we wait to see, I think, what businesses are going to do, how the market is going to react to those business decisions, and then, of course, what is this going to impact on consumers, not only just here in the UK, but in Europe, and, of course, in America as well. So hopefully, you would think maybe all that craziness we saw was like you've had the shock and that was it. You know, I could be wrong. I could be wrong. The US stock market could open again tomorrow and it could just continue on a downward slump. But this is a thing where we're going to have to wait and see what happens. We're going to have to wait and see what happens. We're going to have to wait and see what the businesses do. We're going to have to wait and see what consumers react to this. It is at the moment a waiting game, a very admittedly important one, but a waiting game nevertheless. So, as always, thank you very much for watching, and of course, as always, we'll see you all next time.